Hey guys, welcome back to Andrew Invests. Big week for earnings this week as both Apple and Amazon reported, and it was kind of a mixed one with Amazon doing really well, shooting up over 10% on Friday, whereas Apple dropped around 3% after earnings. I actually sold out of my Amazon stake a few weeks ago, and do I have any regrets? Actually, no. I could have made a small amount of money, around £100 or so, if I had held onto the stock. But personally, I think that for the long term, the company that I chose to invest in instead, Alta, is a better prospect. Now, today I want to actually discuss both of their earnings and give my reactions and thoughts on them, as well as talk about, out of the two stocks, Amazon and Apple, if I had to choose between them and invest a certain amount of money today, which one would I be choosing? Now, Amazon is a really controversial stock when it comes to value investors. Many put it into the same camp as hype stocks like Palantir or Tesla, and think that the high growth rates really don't justify the valuation of the stock.
Amazon's done a great job of generating revenue, but we haven't seen the profit. And I've been hearing for way too long that the investing is working. But the investing is supposed to work by paying out to investors and profit.
Whereas others that I highly respect, such as Joseph Carlson, have a lot of money invested into the company. They have really long and interesting theses on why they think the company will do well.
Amazon's a company, I love the company overall. I love the retail business. I love the Amazon subscription, the Amazon Prime service. So Amazon's a company that keeps coming up with incredible businesses that I don't believe are fully appreciated by the market. By that, I mean the company's undervalued. It's literally not being appreciated by market participants.
Personally, I'm going to come out now and say that I'm in the camp of not really fully understanding the valuation behind it. And because I don't understand it, that's why I sold out of my position, and that's why I prefer to be in other companies instead. So all the headlines were pretty positive for Amazon as they beat on earnings per share, revenue for its subdivisions AWS and advertising. But personally, when I looked into the actual earnings report a little bit deeper than that surface view, I found there were a few alarm bells that as a value investor would keep me kind of concerned about the company if I was still invested in it. So those would be the fact that even though so much fanfare was made about the return to profitability, the return to free cash flow per share positivity this quarter, that when you actually look at the profitability of AWS, it's actually decreased year on year. And when you also look at stock-based compensation, it massively spiked by over or nearly 40% since last quarter, despite Amazon's job cuts and trimming of personnel. Now, that actually raises its stock-based compensation to $7 billion, which completely wipes out the free cash flow for this quarter if you subtract it, as well as the profitability. So in my opinion, I just don't think that they can keep their stock-based compensation under control. It grows at a faster pace than free cash flow and just seems to be massively unsustainable. So Amazon's 11% revenue growth is nothing to be sniffed at. Most companies would be more than happy with that. But personally, I think with a price to earnings ratio of over 300, I think it needs a sustained future growth rate to be higher than that, much higher in fact, to justify that kind of multiple. And with it sitting at nearly $1.5 trillion, I think it's going to be really difficult for it to sustain the growth rates in revenue and profits that it has seen in the past as the law of large numbers starts to catch up, i.e. when a company is larger, it will find it much more difficult to grow given the fact it's so big already. If Amazon was to stay at around a 10% ballpark revenue growth figures for the next few years, I just see there being way better picks at a similar revenue growth figures and way higher margins. For example, Ulta Beauty, Visa, companies like that. And I know a lot of people say that they invest in Amazon purely because of how quality AWS is. Now, if that is true, why would you not just invest in Microsoft or Google instead? In that case, rather than having a retail business, a Walmart almost, tacked onto your AWS, you have a different cloud company with a similar growth rate and quality, but with a much higher margin technology business in addition to that. So personally, I don't really see the value from Amazon right now. Like Amazon, Apple beat its earnings per share estimates, its revenue estimates, but that was mostly because the estimates were relatively low in the first place, and the company actually made less revenue and earnings this quarter than the same time last year. So was the 4% plus drop a justified one? In my opinion, potentially, but there were some really bright spots from the earnings in a way that I didn't see as much of from the Amazon one. So the main positive for me was the increase in services. So despite hardware decreasing in sales, the actual revenue of services increased by over 8%. And I see the transition of the company into a services-based one from a hardware one being a really big positive, as not only do services have higher margins, they're also really sticky, with a lot of Apple's service-based revenue coming in subscription format for things like Apple TV and cloud storage. Personally, in the UK, they are increasing the costs of cloud storage, and this is happening in many other countries in the world, by nearly 40%, but because of the value of the offering and the stickiness of how hard it is to move away, I doubt many people will move away, and that will cause, obviously, the revenue of services to increase by even more.
If you were picking between buying in on Amazon now or buying in on Apple, which would you choose?
Am I allowed to do none of the above?
Yeah.
Okay, I would do none of the above. But first, let's start. If I had to choose, I would choose Amazon, because at the end of the day, Amazon has more levers to pull than Apple. Apple's fundamentally a hardware company. 60% of its revenues from hardware, $3 trillion stock. You know, it's hard to see tremendous gains from here. Amazon has more optionality, but overall, I'd choose none of the above.
Wait.
So I think this analyst is being a little foolhardy here when he says that Apple is just a hardware company and it doesn't have as many levers to pull on as Amazon. I think saying that, you could easily dismiss Amazon in the same way, saying it's just another logistics and retail company. How can it pull any other levers? So personally, I think it's a little bit disingenuous. And when it comes to the question, would you rather buy Amazon or Apple at the current price? Personally, I agree with him in that I probably wouldn't be buying either stock at the current price, but I would personally buy Apple over Amazon. I think the valuation is a lot more attractive, with the price to earnings ratio, forward price to earnings ratio, being 25, around 25 for Apple, whereas Amazon is still over 40. Now, I think both companies are going to have significant headwinds, especially over the next couple of quarters, because student loan repayments are restarting in the US. And that will cut a significant amount of consumer ability to spend money on discretionary goods and, unnecessary goods, luxury goods. So we'll see how both companies do. I do think that Apple's services are so sticky that they will stick around and support any lost revenue from its wearables, iPhones, iPads, etc. So yeah, that answers the question for me. If you guys did agree or disagree with me, please let me know in the comments, and I'll see you guys next time.